What's good, YouTube? It's your boy Zay, and we're back with another Setup Sunday. Now, this week, we're going to talk about corrections versus a drawdown. And I'm going to show you the difference between them, right? We're going to really get in and break it down, guys, because I think that'll really help you understand what happened over this past month of March. Now, of course, we'll get into our topics of the week as well as our TA for the week and look at our levels that we need to make sure that we're paying attention to. And of course, we'll have our classic chart of the week. Now, if you like what you hear, make sure you stick around. Don't forget to press that like button as well as subscribe to my channel so that way whenever I drop a new video, you're in the know. Now, without further ado, guys, let's get right into it. All right, family, so y'all already know how we like to start it off. We're going to get into the hot topics of the week. And from the headline, you already see it's all about this jobs report. So blowout jobs report could power stocks higher in the week ahead. Now, the cool thing about this article is that you can see is that on Friday, the jobs report showed we had an increase of about 916,000 jobs, whereas the economists were expecting 675,000. Now, we saw a little bit of buying on Thursday before the market closed in anticipation, and we'll probably see more buying on into Monday because of this hot report right here. Now, one of the cool things that they point out in this article is right here where it says literally everything and almost everything should be very robust for the foreseeable future. And it's because we're coming off of a low base. Now, the biggest thing that I wanted to point out is this right here, unless interest rates rise too quickly. So that'll be something we'll need to continue to monitor in the second quarter. Now, we should have a very strong second quarter because of the economy reopening and stimulus kicking in and all of that stuff. So do expect stocks to go up in the second quarter. Now, because of that, right? And we have a light macro calendar, meaning there's not too many big events as far as global or the global economy goes. We'll be looking into the most second important topic going into the second quarter, which is earnings season, right? So all eyes are on earnings season. And of course, you'll probably expect to see some run-ups going into earnings seasons. I would say go back and look at the first quarter's earnings and look at those companies who had exceptional reports but still fell. Companies like Apple, companies like Amazon, they had exceptional first quarters. We hope to continue to see that progress moving forward, and it'll be great to see how they do and if their stocks either take a hit or we get the opposite reaction, which I believe we'll see. And then the third most important topic for the week is the Fed. So as we get into this article, you can see that the Fed will be releasing their minutes from the last meeting. And ultimately, what investors will be paying attention to is inflation. So they're going to be looking for anything where Brother Powell is talking about inflation and what that looks like. Because as you can see, a lot of people are still concerned that this inflation issue is going to be a lot bigger. And so when the reports come out on Friday from the producers price index, that'll be something else that we'll be paying attention to as well as far as inflation goes. So those will be the hot topics to pay attention to and what will kind of, as we say, drive the market, right? These will be the type of events that investors will be waiting on, seeing how they play out and going from there. So definitely watch out for these hot topics of the week. And without further ado, we're going to go ahead and transition right into our TA for the week and get into our charts. All right, family. So we are going to kick it off with the Nasdaq, right? So we did hit that all-important 13,300. We closed well above that for the week. Now, what we're looking at is a daily chart here. So let me go ahead and change it to a weekly. And just so you can see our progress, as we had talked about, hey, our base was going to be down here. I believe it was around that 12,975 is what we talked about. And for the week, we got as low as 12,922. And we finished above our 13.3 like we talked about. So going into this week, what should we be paying attention to? Cool. Our first level of resistance that we'll be paying attention to is going to be around this 13,543 level. This is where we want to pay attention to. 13.6 as well. I think that's what we talked about last week. So basically giving ourselves a pretty tight trading range here of 13.6 to 13,550 as far as levels of resistance that we want to pay attention to. Now, as far as support, and in case we get like a pullback during the week, which, maybe we could, but I think overall we should continue up. Definitely pay attention to 13,353 to serve as a level of support there for us. So if we do kind of get a little bit of a pullback, you want to pay attention to that 13.53. And really what I'm actually going to do is I'm going to move our secondary line of support to right here, right around this 13,267 area. So we'll definitely want to be watching these areas on the Nasdaq. And if I go down to a daily chart, you can kind of see why there's a little bit of a gap here. So we could look to possibly close this gap, as well as our Bollinger Bands puts us right about that high point, which is 13,615. So as far as the week goes, these will be the trading zones or trading areas you need to pay attention to. Ultimately, this is, our level of resistances, and these are our levels of support that we'll be watching. So that's the Nasdaq for the week. Those are the key levels that we want to pay attention to. So let's get into the QQQs. Now, for the QQQs, looking at this chart, let's go back to our weekly. Again, it bounced right off of our support, which was 311 or so. You can see our 20-day EMA is right at that 314, 315 area, which held perfectly. So that's awesome, right? So now we are now at one of our key resistance levels, as you can see. So we had a previous close right at that 13 or 325. I'm sorry. And then we had some rejection on this candle right around 324, and then some rejection around 324. So now that we're right at 324, ultimately we want to see is another breakout. I feel like the next areas that we want to be paying attention to, as far as a close, would be right here about 329. 330 area. It's definitely going to face some resistance in these areas. I don't expect it to get no higher within this next week. As far as 332 is probably going to be the top, even if we get that high. But more or less that 332 to 329 area is what we'll want to see. So there'll be like a green candle, kind of like right here closing this up. But we'll see. So as we said, and if we go down to the day chart, you can kind of get a good view of why these levels are going to be important. So let's bump that up just a little bit to 319. And as you can see, we got a little bit of a gap here. We have our 50-day EMA right at 321. And so these are going to be those levels that you really want to pay attention to. If we break out, do we get to 329? If we hold that, do we push it to 332? If not, do we break down and come back to test this 319, 320 area? If that doesn't hold, we possibly could break down to where we see our 20-day moving average, which is at 315. And then ultimately 311 will serve as our base or as our final support. So for the QQQ, these are the levels that we'll want to pay attention to for the week. Going into the SPX, let's get into the SPX next. So the SPX is our next chart that we're going to be paying attention to. And as you can see, I already have our levels set. So we're technically on a breakout on the S&P 500. We broke 4,000. Now the next area we want to be really paying attention to is, where do we top out at? How high can the S&P push before ultimately, we have to come back down and touch some support? Now, ultimately, let's just talk about where those levels of support are, because we really don't know where the top is. So all we can really do is just say, okay, once we get to the top, what should we be paying attention to? Now, ultimately, we broke out here, right? This was our main level of resistance. At the top was 39.42, right around 39.50. And so now we have broken out. So ultimately, now that we have broken out, right here, this 39.75, that's probably going to be that first area of support, right? If this breaks or does not hold after we kind of top out, you want to pay attention to 39.42 or that 39.50 area. And as you can see, our 20-day moving average is creeping up to that area. And then ultimately, our next level of support will be 38.84, around 38.85. That's right in line with our 50-day moving average. And then if that broke down, again, we want to see 38.11, which is basically 3,800, be our final area of support for us. And so that is the SPX as we head into next week. I can change it to a weekly just so you can kind of see where we are. And as you can see, I mean, Oh, sorry guys. Just looking at this chart, this thing is beautiful. We're looking like we're probably going to get our third green candle, which would allow us to see the three white soldiers. And so for this week, let's just use the top of the Bollinger Band. So look out for 40.50. That's probably where we'll top out this week on the S&P 500 if we keep going up. Is 40.50. Ultimately, we'll probably kind of hit here. We'll tap up here, and then maybe we could see a push come back to this 39.75 to make sure this is support. And that could be our trading range for the week on the SPX. So just pay attention to that. And if we break out higher than 40.50, then you might as well say hello to 4,100. With that being said, let's go ahead and transition right into the SPY. So looking at the SPY, look at that. We're right at 400. So going into this upcoming week, what levels do we want to pay attention to? So again, already have some levels set for us. The first area of support we're going to look at is going to be 396.54. Our second area of support is going to be 392.35, and then ultimately that bottom support is going to be 385.43. Now, I don't expect us to come back down. I'm really expecting us to go up and for us to really break out. Now, as far as how high, I kind of have us going to around maybe about 405. So that's 403.97 at top of the bands. You can see, so if we pop out of this, we probably will run a little bit more. So I'm expecting us to go to about 405, 406, somewhere around there before ultimately we top out. And then we have to come back down to our support levels to make sure those hold. And so that is the SPY on a weekly and on a daily. Those will be those levels we'll go to pay attention to. As you can see on a daily chart, if this thing breaks out, we can see it go as high as 403, 405. And ultimately, you got a gap here. So 396 would be that first level of support. And as we said, 392, and you can see our 20-day moving average lines up perfectly. So those will be the levels you want to pay attention to on the SPY. The next chart that we go through weekly is our US 10-year Treasury, just because we want to keep a close eye on the yield. That was something that was really impactful on the Nasdaq early on. I think this is starting to fade now as we're starting to expect the US 10-year Treasury to trade within the range. So as you can see, it is starting to break down. It did go as high as 1.77 last week, and now it looks like it's going to come right back down to our support right around this 1.62. If you see our 20-day moving average is right here at 1.63, so we do want to see it come down. If this does not hold and breaks the next level of area of support, we actually would see it's probably about 1.54, 1.55, just adjusting that a little bit. And then ultimately the floor is going to be right up in this area of about 1.48. Don't think it's going to go nothing less than 1.5. So this is our US 10-year Treasury on a daily, just to flip it to the weekly so you can get an even better view of what we're seeing. As you can see, some of a top is forming here, and we expect for it to kind of just trade in this range. And ultimately, we didn't think we'd be in any trouble or see any trouble until we get above this 1.95. So still keeping track of the US 10-year Treasury, making sure this thing is not going up too fast, because like we talked about in our hot topics for the week, investors are still paying attention to these interest rates and this rising treasury yield here. So it is something we should keep an eye on. The next chart that we want to get into is going to be our VIX. As we look at the VIX, you look at that, baby. What we talked about last week, closing that gap, closing this gap right here from back in 2020. We pretty much closed it. Let's go ahead, and if I could zoom in and show you here. In order for us to really pretty much close it, we got to get down to about 17. And as you see, we're right at 17.3. So what to pay attention to, right? So going into next week, again, this VIX is something we really have to pay attention to, because, we could hit the 17 to see somewhat of a bounce, or we could just continue going down as more volatility leaves the market and as the market starts to return to normalcy. As you see, we did break in a smooth clean under the 200-day moving average, and our 50-day moving average as well as our 20-day moving average are still pointing down, which means the VIX could still be going down. And we know as the VIX goes down, the market goes up. So paying attention to the VIX. Now, as far as the levels for the week, let's go down to a daily. This is what we have to kind of watch out for. We had a clean break under the 18.8 which was one of our levels we were paying attention to. Now we could possibly see us hit this 17 and then look to bounce to test this 18.8 for us to see if we can get back through. If not, pretty much we could see the VIX trading in this range of, pretty much 21 to 20 down to 17. And so what I'm kind of expecting is for more pressure on the VIX headed down. Just be careful of us trading between 18.8 and 17 for the rest of the week. Again, as I said, as we return to normalcy levels. So that is the VIX, guys. That's the VIX for the week. Now, let's get into our last two, and then we'll get into our chart of the week. So we have Bitcoin. Now, as you can see, Bitcoin is kind of just consolidating a little bit, trading sideways here. It's having a really hard time getting through 60,000. If it can get through 60,000, that would set us up clearly for 61.5. And then if we break there, the next level we'd be looking for 65,500. If we cannot break through, then of course we could see us heading down pretty much back down to 50K. If we look at it on a weekly chart, you can kind of get a better feel. As you can see, we had two hammers here, and this last one went right down to that 50K where we found some support and kind of bounced up. So if you look at it from a weekly perspective, it's like, yo, look, if we close above this 58.42 and really get some buying pressure going into this first week of April, we really could see Bitcoin push up to about 65,000 or so. And from there, it's going to get real interesting because I just want to show you guys, like, look how far Bitcoin is trading above its moving averages. And typically when something's trading that high above its moving averages, you tend to see a correction. I mean, I know we're in a bull run, but I'm optimistically cautious about Bitcoin right now because we really haven't seen it correct, and it's been really on a tear. And so when you look, the 20-day moving average right now is approximately, we're about 50% above that. So, that's kind of, that does worry me a little bit, being that, our 20-day is right around 38,463. And then our 50-day moving average on a weekly chart is still at about 22. So I'm a little wary on Bitcoin, y'all. I think we could be going through a consolidation phase and probably see a little bit of a drawdown, which we're actually going to get into towards the end of the video. But yeah, definitely paying attention to Bitcoin. So as far as the levels to pay attention to is we're looking for a breakout of basically above this 58, getting to 61, 65. If that doesn't hold, we want to see support here at this 50,500. And then we have some more support levels at this 44,813 or so. And then the next area of support we want to see if we move this up to make sure it matches is right at that 38.5, which puts us right at the last resistance and right where our 20-day moving average is. And so that's Bitcoin. So let's get into Ethereum, and then we'll get into our chart of the week. Now, look at Ethereum. At the time of this recording, Ethereum is busting it, baby. That's what I'm talking about. We are over 2,000. We did hit 2,100. And I think we talked about this last week where we said, hey, if Ethereum can get through this 1,900, it's pretty much on and popping to about 2,000 to 2,400 was the areas that we saw. So if you look, if Ethereum can continue this upward momentum, we got to top somewhere around 2,300 or so. So I'm definitely paying attention to Ethereum. You guys know how much of a big believer I am in Ethereum. And I actually said that we could possibly see Ethereum sitting at 5 to 10K by the end of this year. So we'll see. But this chart is looking really good. This is a very explosive candle here. So we definitely want to continue to see that pressure, which is why I think we'll continue to see consolidation and maybe even some price depreciation in Bitcoin, because Ethereum and the altcoins have to catch up. And so that's ultimately why we can see Bitcoin kind of come down a little bit, because the rest of the crypto market actually has to catch up. Again, if you've done any studying on crypto markets, you know that once Bitcoin has so much of a percentage of the total crypto market, some of that money tends to go into the other altcoins, as they're called. So mainly Ethereum and a few others being the beneficiaries. So loving what I'm seeing from Ethereum. As I said, the next levels I'm going to be paying attention to is a continued breakout up to about this 2,300 level. We do want to make sure that this 1950, 1955 level holds as support. So we could see somewhat of a mini pullback to this area to make sure this does hold up. But other than that, this Ethereum chart is looking really, really strong, guys. Really, really strong. So with that, let's get into the chart of the week, which is actually going to be TTD, Trade Desk. All right, guys, so we are now looking at TTD for the chart of the week. Now, I really love the setup on TTD this week. Actually, I put a call out to my group for a little bit of a YOLO play on TTD. Remember, this is not financial advice. This is for information and educational purposes only. So please remember, investing carries risks. Now, TTD, I love this chart and what I'm seeing here. As you can see, we've had our A wave or our first main pullback. We got a nice bounce, and then we had a retest. We had a retest at 593, and we finished the week at 658. Now, what I see from TTD is based on where we finished, I definitely think that we could see TTD run up to about 750. That's ultimately the first level of resistance we would possibly see is right around the 750 to 732 area. If that breaks or if we can get through there, then I can definitely see TTD running up to about 804, 805, or 800, right where the this 20-day moving average is on the weekly chart. So I'm loving what I'm seeing from TTD. If we change it to a line chart, you actually can see how clear this chart is. We've got major support up in this area. It bounced twice off of this 593. So I think this gives us clearance to get back up to about this 804. Maybe, like I said, we'll face some resistances in this 750 area. You can see we got 2 touches here, but if we can, or really 3, because right here, and if we can get through, then 800 definitely by, the end of this week going into next week for TTD. So if TTD is not a chart that you have on your watch list, I would definitely add this. As you can see, we have seen massive buying in this area before. And the fact that we're going into April, which is historically a great month, I do think we could see a rebound in TTD. And so that is why TTD is the chart of the week. Now, what you all have been waiting for, we're now going to talk about a correction versus a drawdown. All right, family. So for the lesson of the day or the lesson of the episode, we're talking about a correction versus a drawdown. Now, a correction, and you've heard us talk about this multiple times. A correction typically lasts anywhere from 21 to 30 to 45 days, and it could be anywhere from 10 to 19%. Now, I want to add a little bit of sauce onto that right now, because when we talk about a market correction, we're talking about either indexes or a composite, right? So if we look at, for this example, I'm going to use the Nasdaq. So if we look at the Nasdaq, right? And if we were to just draw a info line or a percentage line telling us how much of a decline did we go from the top to the bottom, it's going to give us a certain percentage, right? So let's just do the info line. We're going to go from the top here, which is on February 16th, and we're going to draw this down to the bottom here, right? Let's just say that we consider this the bottom at the time. Now that would give us a correction of 37 days and about 9.52%. That would technically fall into correction territory, right? Like we would say, yo, that was a market correction, right? And even if I go here to what was the very low, and shout out to the big bro Mark and myself, because we called this out. We said, yo, this was the bottom for the Nasdaq. We haven't gone any lower than this 12,400 since the episode aired. So shout out to big bro for that. Now, if we look at this, this still falls within correction territory, right? You got 17 days, and we fell 12%, or at the lowest we were down 12%, 12.5% at the lowest, right? And then if you added in a couple more days, like I just talked about, you got 37 days, and we're still down around 10% or so, 9.76. And so that whole time, it's like we're going through a correction, right? So most people felt like, hey, going through a correction means at most some of my stocks may take a 10 to 12% hit. And we know that's not true. Now, when you look at the market overall, is the market down from its highs to where it is in correction territory. That would be say 10-12% or so. Yes, but here's what happened to get us there. What got us there was multiple drawdowns. Now, there have been times when we've seen stocks just have continuous red days, right? So let's really put this correction into perspective. Let's really get into how did this all go down. So let's see how many corrections did we have during this period of March. And this is going to ultimately be our drawdown. So our first drawdown really started right here on February 16th, and we bottomed out right here in 7 days at 8%. So the first 7 days we lost 8%, right? Now, but look what happened, right? And let me just remove this. So remember, the first 7 days we lost 8%. From that period, though, we got a somewhat of a bounce. Remember, we got somewhat of a bounce. So within the next 2 days, we gained back 4%. Now, mind you, the first 7 days we lost 8, but within 2 we gained back 4. So now we're at 4% flat, right? But when on the options contract, you feel that. Now let's look at our next drawdown. Our next drawdown, which was our next significant decline, happened over these next 2 days where we suffered another 4%. So it pretty much wiped out the bounce. So now we had a decline of 8%. Now we got another one of 4%, right? And then we got another bit of a little bit of a bounce, right? We got a little bit of a bounce. And in that time, we bounced another 4%. But basically at that point in time, you're basically trading flat. And as we all know with an options contract, trading flat is not good, right? Like you're not gaining anything. And here's the most significant drawdown, right? After doing 8% and up 4%, down 4%, up 4%, then we had another significant drawdown right here. We had another 8% drawdown within 2 days. That one really, really hurt, right? And if you really think about it, you might as well add in this extra day to put us down 10%, because what happened was we opened up here, but when we got drawn down, or we went all the way down here, and then finally buyers came in to buy it up. But essentially you had been losing premium until the buyers came in, and you might even not have gained as much back when we came in, right? So now you had a drawdown of basically 10%. Then you had a bounce, right? And you thought everything was cool, but no. Then you got to add in one more day where pretty much on this day we lost another. Well, actually, let me do this correct because I don't want to fabricate. But we lost another 2.4%. So that's another day where you lost another 2% in the market, which is significant, right, guys? So that's another drawdown. These are all red days, and this is why a drawdown is different from a correction, because a correction could just be a straight line of from 37 days, we just lost an overall, 10%. And when you're holding stocks, that's fine, right? Because you're just losing a dollar amount. Whereas we know with options, it's a little bit different. So holding options through a correction, it's not the same as holding stocks, because yes, a stock, you may lose 10%, but with an option contract, that's multiplied. So each of these drawdowns, you feeling it. So let's continue with our drawdown. We're still not even done. And this is why a lot of people were hurt in the month of March, is because we had so many drawdowns, right? So then we had a nice little bounce from here to basically in the middle of March, where we gained about back 8%. People got happy, like, whoo, we got some relief. But no, we weren't done. So then towards the end of March, when we got back to this top, we had another drawdown of 4%, right? And then we got another bounce here, and I'll even tell you what this bounce was. This bounce was pretty small, so it was about 2%. So it wasn't as much as, that we had lost. And then we had another drawdown when we got here. So then we had another drawdown of another about 5% over 2 days or 3 days or so. So all in all, guys, when you look at, okay, yeah, we corrected from February 16th pretty much to the end of March, and over that period, the market only, lost. So, it looked like the Nasdaq only lost 7.3%, but in reality, we suffered multiple 8 to 4% drops. And that's what was so killer to some of the positions that some of us were in. And that is ultimately the difference between a drawdown and a correction. While they kind of are like cousins, the same thing, no pun intended, but you can see the difference, right? Because it's like, all right, over a period of time, yeah, I only lost 10%, but look how significant those drawdowns was. And that's why you had stocks like ARKK down 30 some odd percent, or you had Apple down 25%. Like some of these companies were down huge amount. I mean, Teladoc down 30 some odd percent because they suffered significant drawdowns. Like their drawdowns wasn't simple. So all in all, guys, when you have a correction, you really need to say, okay, am I in an ETF, right? Or am I in an individual stock? Because we know that it's not all the same. It's not all the same. So sometimes, you know, stocks will correct a lot deeper than the overall market. And so you need to take that into consideration. So hopefully kind of walking you guys through and explaining a drawdown versus a correction will help you better prepare in the future for moments like these. When in corrections, you can kind of start to strategize. Okay, how should I be hedging against myself? Should I get out of certain position because I know a drawdown is coming and I can essentially reposition myself even at a better strike and at a better price versus holding through a correction and, you know, basically taking a significant hit. You can kind of cut that, actually play some puts and hedge, make some money to the downside, and then ultimately reposition afterwards. I think that's something that we don't stress enough of. Hey, when there is a correction, don't feel bad to take profit and reposition moving forward. Yes, you have time, but hey, sometimes people don't want to, you know, leave profit on the table, and there's nothing wrong with taking money off the table, repositioning, and moving forward. So guys, that was today's episode. Hopefully I wasn't too long-winded. I hope you got a lot of good value out of that. And without further ado, we can go ahead and close this video out, guys. All right, family. So that was the episode for the week, guys. So we got the news that we need to pay attention to. We looked at our technical levels for the week. So definitely make sure you pay attention to those. And then we discussed a correction versus a drawdown. So now you should definitely be more prepared as we move into the future to protect yourself against these type of things. Now, if you like this episode, definitely press that like button. As I said before, don't forget to subscribe to my channel. And more importantly, if there's a topic you want me to explain more in depth or go more in depth about, please drop a comment below so that way I can do an episode for you guys and get this information out to everyone else. If it's a question that you have in your mind, I'm pretty sure there's other people wondering the same thing, guys. So definitely leave a comment down below. And y'all already know, until next week, stay blessed. Peace out.
Run it up, run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building. Who else but us?